Good morning. Oh my gosh, it's almost October. Have you feel I'm like
Let me slow blink a couple of times to
oh my gosh.
process that.
So I've never decorated for Halloween. I'm just gonna be honest. I was that homeowner that hid in the basement. I did. I would send out I would send out the kids and Peter and I would go sit in the basement and we'd watch a movie. That's what we did every Halloween. We did not decorate.
I have a trunk or treat on Friday. Tomorrow.
It's not
in my neighborhood.
No, it's still September tomorrow.
It's September.
Isn't it?
Well, we have two fall festivals, a
Yeah.
trunk or treat. We're golfing on Saturday afternoon. Like
Yeah.
I've completely jam-packed my weekend.
I don't like that.
I know.
It is so not trunk or treat.
I know it's a
time.
kid weekend. So there's a lot going
It's
on.
a
There's
lot
so
going
much
on.
going on. And then we got to do homework. And we got projects to do.
I love that my kids are in their 20s. I'm just gonna say that.
Do you want to come help me with bath time and bedtime?
No.
It'd be great if you could read a story.
No. I could read a story.
Yeah.
I actually could do that really well.
Yeah.
But we actually bought, we talked about this last time. We bought some Halloween decorations. So I'm excited. We're putting those up this weekend. I told my husband we're not doing it until October 1st on the calendar.
Yeah.
But we're getting ready. So I'm super excited.
I used to buy like 1,000,000 pumpkins for October because I love going to the pumpkin patch. But now I'm in deer country and I can't put pumpkins out.
You can't because
I know they're going to eat them.
So, all right, we digress. I am just so excited for fall. Look at us. I'm still summer. It is so warm today.
I know.
I want to talk about the quote today in the context of the environment that we're in together, right? And I know that Megan is going to deep dive on the real estate. I'm going to talk about what the hell just happened with our interest rates. I'm sorry. I'm just going to say I'm sorry right from the very beginning. But you've got to know that this is going to continue to breed fear, and this is going to continue to breed negative headlines, and this is going to continue to breed a stall on our buyers and sellers' ability to make a decision, right? But we got some inventory coming on. We definitely, sellers got the memo that the beginning of October is a good time to buy. And so if anybody's trying to get their house sold, they're getting it on as quickly as possible before the holidays. I saw this quote, and it's from Phil M. Jones, who is our keynote speaker at the next big thing. He is the most brilliant, he's profound, and he is amazing, and he's adorable, and he's just yummy. I hope he doesn't watch this. He's gonna he's phenomenal. And we're gonna be walking away with so much, but this is his quote. Use your imagination to fuel your future, not sabotage your present. Now, I had to read that a couple of times before it sunk into me in a different way. So use your imagination to fuel your future, not sabotage your present. Your imagination is the thing that keeps you up at night, right? It rattles around in the fears and the stories and the headlines. Your imagination takes you to places that your reality isn't even going there yet. So we can sit and spin out in our current present and keep ourselves from taking action, or we can use that power of imagination to create a future so strong, a vision so powerful that it draws you towards it. Right? So, I mean, I was like, how is that? I mean, it really started to settle in, and I have no idea if it actually meant it that way, but I'm going to tell you.
That's what I took it as.
This season right now needs that quote. Stop spinning out on your today, right? And create this massive opportunity for tomorrow, because this is, as we were talking about right before we started recording, this is the market for winners, and where winners are made, and where you take market share. And regretfully, when you take market share, I was actually listening to an interview on CNBC with the CEO of Redfin, and he says that we're positioning to take market share. And when we take market share, we're taking it from someone, and there will be winners and there will be losers. And that's just is. I'm right?
Yeah.
So the opportunity, use your imagination to fuel your future, not sabotage your present. Miss Megan, what in the world is happening in our real estate market?
You know, it's been interesting. September started off slow, slow because of Labor Day weekend. And we have the lowest odds of selling in that weekend headed into Labor Day. So we had advised you guys, not a great weekend to list. not a great weekend to make a price reduction. But waiting until that weekend afterwards, and then we ended up seeing that new listing activity in the second weekend of September picked up by 91% week over week.
That's massive.
And there was a ton of new inventory that made its way into market. And so inventory has been kind of tricky to follow along with so far this year. And so because our inventory for the month of August was actually down from the month of July, which is historically balking what that typical trend looks like. But then the second weekend in September came back through, and we ended up seeing that our inventory popped back up again, and our inventory has been slowly climbing over the last couple of weeks.
Yep.
And historically in the month of September, we see the most number of active listings available for sale. Then as we transition into October and we get closer to the holiday period, we start to see sellers that had been listed probably in the late summer pulling their listings from market in favor of waiting until next spring to sell their homes. So going into the next couple of months, we're going to see more withdrawn and expired activity. But what's interesting this year is that we've been talking about this since we're blue in the face, but this is the year where people have to sell and not want to sell.
Yes.
And so I think that we're going to see more motivated sellers that are out there right now because they're in a position where they have to buy or sell, and not necessarily because they want to buy or sell. And this last week, we ended up seeing that our sellers became very motivated in the last week of September because the rate of price reductions increased pretty dramatically this last week. And so people are done. They want to sell their houses, and they're taking major concessions in order to get it sold right now.
Well, I mean, there's a lot of headlines and a lot of news talking about the first week of October is the best time to buy. I mean, you have to see that as a seller that you get towards Halloween, and now I got Thanksgiving and in a depressed market already. So you're talking about sellers pulling their house off the market. The demand is doing the same thing, right? They're just like, I want to get set up, but then I'm just going to wait.
Well, and I think that there's so many people that are saying they're going to wait for rates to drop.
Yes.
And I think that that's just not a great strategy in this market. I think that if you were a move up home buyer, now is a really good opportunity for you because the market is still incredibly strong below $750,000. Whereas once you go over 1.5 million, the market shifts into a 3-month supply of inventory. And you have an opportunity to get into that market now with negotiating power. And my big concern is that if rates drop even into the 6s, into the 5.5% mark, we've got a lot of pent up demand because we're off of our normal transaction count by about 30% year to date right now. That's 30% of people that are waiting on the sidelines until rates drop that are all going to come rushing back to the market when rates do soften. And it's going to create a run on the market again, like what we had in 2020, 2021, and 2022. That's not a good market. We don't want to go back to that market.
We don't. And builders are seeing it too, right? They've got a lot of inventory that due to supply constraints, labor constraints, it took them a while to get to market. And now we've got supply coming on that they'd love to get off their books by the end of the year. And so you're seeing builders that are willing to negotiate, existing home sellers who are willing to negotiate. I get the fact that it seems really overwhelming and prices are high and interest rates are high, but it doesn't get better from here.
Right.
Home prices are going to continue to go up. In fact, I'm going to show you in the next slide or in the back half where we just hit yet another all-time high in home price appreciation. Yikes, right? And this is where it goes from here. So having those conversations and the education are so key right now to use this data.
Yes, I think I really do think that the strategy is buy right now if you can. And if rates go up, you're going to be happy that you got in when you did.
Yes.
And if rates drop, you can refinance and get out of there. But it's still better than the alternative of paying rent.
Yes.
Always.
Yes.
Oh, let's go ahead and hop into the numbers. The way that you set this up always messes me up.
I'm sorry.
I can't, like my brain just completely scrambles. And I think I set it up the way that you did this time.
We've only had this set up like this for 3 years.
Did I get this right?
It's always that.
I don't know. My brain scrambles. So it's not the way that I do it when I'm like at home. And so it shows is the screen sharing this screen? What am I sharing?
I'm watching. Hang on.
Okay.
Let's see.
It doesn't show that I'm sharing this screen. Let's see.
All right.
Let's see.
Yeah.
Did it work? Did it work? Are we working?
It's yeah, let's get it going.
Okay.
It takes a
so
second.
We'll go ahead and start talking about this. But one of the things that I wanted to draw your attention to is that in this presentation, it doesn't look like talking. No, it's not showing right. Stop the share. Sorry, guys, technical issues. This is what happens when you go live. Let's see. Back to Zoom. Here we go. I'm just going to share this one. That should do it. All right, now I need that to go away so I can actually share my slides.
All the
Okay,
things.
there we go.
Okay.
Okay. So this goes over September 20th through the 26th of 2023. And one of the things that I want to make sure that all of you are aware of is that I go through and I put together the weekly highlight reel for you. And so a lot of you are confused or don't know quite what to say about what's happening in the market, especially as you go live on social media. But what you can do is take this first slide of the highlight reel and I go through and I swap out the numbers and change out the narrative every single week.
Yes.
Take this, load it into Chat GPT
Yes.
and ask it to write you a 90-second reel so that you've got this information ready to go. And you can load it into a teleprompter app called CapCut, and you can start to scroll through and read it while you are actually live taping right off of your phone. But this gives you all of the talking points that you need. Or if you're headed to a cocktail party this weekend and you need to know what's happening in the marketplace, I've got all of that typed up for you, as well as when I send out the email each week.
Right.
I also include kind of the top 5 bullet points that you need to know about what's happening in the marketplace. Now, headed into the next couple of weeks and months here, again, remember your strategy sheets for pre-COVID 2019. We ended up going through, and when I put this together, it comprised of 800,000 rows of data to put this together.
That takes a hot minute.
It takes a minute and it crashes your computer.
I bet it does.
It's too big to work with on my computer. I had to update to like the 64-bit Excel in order to get it to work. And so it was 800,000 rows of data went into this to talk about when the market is most competitive versus less competitive. And this could be a really great sheet for you to share with your buyers on, because headed into your target listing month or your target buying month of October, with shooting for a December closing, you can see how that column turns blue, and it happens to stay blue also for November. And then in December, our inventory starts to drop. And so we start to see the market actually get a little bit more competitive as we get into December. But October and November are really prime buying seasons right now. I see a lot of fix and flippers that are purchasing their properties in October and November in preparation for holding that property for a 6-month period to renovate, and they get it ready for market in March or April. And so you have great negotiating power right now, because the sellers that are in the market right now, again, have to move, not want to move. They're motivated and they need to get it done. So great negotiating power as you head into that. And then,
so I just saw a study, 90% of sellers do not want to spend the time, money, or energy to fix their home before listing it. 77% of buyers won't even look at a home that's not move-in ready.
Yeah.
This is opportunity for investors.
Yes.
Because there is going to be fix and flip opportunities going on right now.
There definitely are. Now, here's our strategy sheets as we start to head into the weeks of 2023. And so for our first part of our year, we were hot up until about May. Getting into June, it started to settle and cool off. Then by the time that we hit Independence Day weekend, as we do every year, the market really started to downshift. This blue row that runs right through the bottom of this, about 4 rows up from the bottom, that was Labor Day weekend, to show you how slow that it ended up getting. And then it ended up warming back up just a little bit. But as you can see, there's a slight variation in that color there in the odds of selling that shows that our market is starting to slow, and it's going to continue to slow through the end of the year. It is super important right now that you're having these in-depth conversations with your sellers to help them set appropriate expectations as to what to expect headed into a shifting market going into the next couple of months, because things will continue to slow down. And so if you have a seller that thinks that it's 2021 or 2022, they've overpriced their property, they're not getting any showings. Again, you need to go back through and show them the data and the difference in the showing activity that we saw back in 2021 and 2022 versus what we're seeing right now. And it is important that you understand going into the first weekend how long you can expect to be on the market for, what your shows per week are, and how many showings it's going to take to go under contract. I'm having so many conversations right now with sellers that are in the $1.5 million range down in Castle Rock right now.
Oh, right.
Because there's so much new construction that's happening there, and those builders are offering crazy rates.
Yes, they are.
That are making them more desirable for that new construction product rather than the resale market. But I've got a lot of sellers that are just kind of hanging out and waiting in that Castle Rock area right now, in that $1 to $2 million range, that are just sitting.
I mean, I don't know what you do. What do? You just pull your house off the market and wait till the market equalizes a little bit?
I mean, to be competitive, offer a rate buy down.
Yeah.
to try and help out with some of that.
Because when you're up against the builders, they've got deep pockets to do
they
the
do.
forward commitments.
Yeah.
Yeah.
And so I think that that's it, or
Yeah.
otherwise you're taking major price reductions to
Yeah.
get it under contract right now. And I would hate to see you reduce your price. And at the end of the day, the same cost goes into a rate buy down. That's going to be a more effective use of a buyer's money
Yes.
than it is to do a price reduction.
Yes.
And so the hard thing though is trying to get that advertised appropriately in the MLS. I mean, it needs to be in big bold letters in the first line of your public remarks field within your listing, that when you input that into the MLS.
And you probably need to do a price reduction if you've already had it on the market,
If
so
you've
that it
already
announces to
had it on
everybody
the-
that you're doing that, right?
Yes, yeah, in order
Uh-huh.
to reping out
Yes.
the prospect matches so that people know that you're willing to offer a rate buy down,
Yeah.
you do need to couple that with a small price reduction
Yeah.
in order to reping those searches again.
And if you guys want, we have a rate buy down spreadsheet so that you can show the seller exactly based on how the buyer comes in, because it's based on the loan amount, what that could cost the seller.
Yeah.
That'd be helpful.
Definitely. Looking at where we were for our average daily active count, again, it came up by about 3.3% week over week. We're at 6,800 available homes for sale. That was not because we had a bunch of new listings enter the market. We had 1,000 on the dot new listings enter the market last week. And so that was actually down by 3.9% from where we were 1 week ago. New listing activity is down by about 3.4% from the same week 1 year ago. Back on markets continue to be up. And so this week they increased by 7.7% with 252 units back on market. Again, looking at where we are from a title company perspective, tracking what goes under contract and then falls out of contract.
Yep.
We have a 25% cancellation rate right now. And so that means that
Feels like it's more than that.
I know
It's
it does,
1.5.
but 1 out of 4 transactions is not making it to the closing table. So I
Mhm.
took a deeper dive into that with my closing teams. I was like, tell me why your transactions are falling apart. At what point in the contract are you?
Yeah.
Is it earnest money not showing up? Is it inspection items? Is it appraisals? Is it loan conditions? And they said it's everything. It doesn't
Yeah.
matter what it is. We had one termination come in last week that literally said cold feet.
But you don't get your earnest money back on cold feet, do you?
No.
Okay.
No.
I was gonna say.
You don't. And so they
Yeah.
signed over their earnest money because they ended
Yeah.
up getting cold feet.
Yeah.
And so pending transactions, excitingly, ended up going up by 7.5% week over week with 856 total units going under contract. That puts our month supply of inventory at about 1.8, whereas historically in the month of September, we usually sit at about 1.9 months worth of overall inventory. So where we're baselining is right where we're supposed to be in the market. The
Yeah.
only big difference is the amount of price reductions and the size of price reductions are up this year.
Yeah.
Again, very motivated sellers if they're in the market right now.
Because the overall transaction count is so far down.
Yes.
Yeah.
Yeah.
Got to get aggressive.
And so the overall odds of selling, this is a great graph to show if you're dealing with those sellers that think that it's 2021 or 2022. You can see that back here in 2022, it was right after President's Day weekend, our overall odds of selling ended up shooting up to like 88% overall odds of selling had they listed that week in the next 30-day period, whereas now we're down to 46.5% overall odds of selling, and that's likely to decline as it did last year through the end of the year. And so we'll expect to see fewer of those units actually going under contract and closing as we get deeper into the end of the year. We're still far from a market imbalance. And what's been interesting is that there are fewer sellers, there are fewer buyers, but everything is dropped in proportion to each other. So
Yeah.
it's kept our inventory choices very tight overall. And so at this point in our marketplace, we would still need to have about 22,500 active listings in order to offset demand. Whereas we only have 30.5% of what we require to offset demand. Builders can't keep up, listing choices are thin. And so keeping all of that low, we have not seen the retraction phase of our real estate cycle, where we historically see our average home prices fall by about 5% from July, August, and September. Last month, they actually went up. And so we're not seeing that big pullback in average prices because our inventory is so tight.
Yeah.
And we have this baseline level of buyers that have to buy right now that see the opportunity in the marketplace.
You know, I would venture to guess if you asked a seller or if you asked a builder, they would not tell you that inventory is tight.
I know.
Right? Because their days on market, because buyers are so picky right
Yes.
now, because the cost of everything is so high.
Yes,
The feeling is not matching the data.
I know. I
Yeah.
really liked the video that you did. I think it was last week, but you said, I just got robbed.
Yeah. Yes.
I really like that one. I was like, and everyone feels like they're getting gypped right now.
Yes.
Buyers are frustrated because it's expensive. Sellers aren't getting the prices that they could have gotten
Yes.
1 year ago.
Yes.
People are only moving because they have to move. And so it's making for these really stressed out transactions. And I'm seeing a lot of buyers and sellers. I am seeing some of the craziest inspection resolution addendums come through lately, where they are just laundry lists of stuff.
Yeah, because they don't have any money left.
They don't have money.
You got to
go
fix
through
all
and
the
fix
things.
it. Yeah.
Yes.
So your house has to be in
Yep.
top condition in order to go under contract. And those that are in great turnkey condition are going under contract in the first weekend with multiple offers.
Yes.
Whereas those that are not, that have projects that are languishing, the buyers don't have the money to come back in and make the modifications to the property right away, but they have to live in it for 5 or 6 years. So it has to be in a condition that they're willing to live with for 5 or 6 years before they're ready to go through and make those modifications on that property.
So that's an opportunity for listing agents.
Yes.
Maybe to even get more listings when they bring in a contractor or they have a team already, or they use a
Yes.
service like Curbio or something like that
Yep.
to say, I'm going to take this off your plate. We'll get it paid at closing.
Yes.
Right. Because a lot of sellers don't have the money to do it up front.
Right.
Yeah.
Right. Looking at where we were for showings, they fell week over week by about 2.8% with 11,500 total showings. So that was about 1.7 shows per property per week. So if you're not getting your 1 or 2 showings per property per week, that could be indication number 1 that you need to go through and make a price reduction. The good news is that shows to contract came back down. And so over Labor Day weekend, it was about 16 showings to go under contract. Now we're down to 13 showings to go under contract. So people are looking at fewer homes before making a choice. So if you've had a total of 13 showings and no offers, it may be time to make a price reduction at that point. Median days on market ended up going up week over week by 28.6%. So homes are really starting to sit and hang out there a little bit longer. And I really hope that we don't go into the same fourth quarter that we had last year, where by the time that we got to the end of the year, it was a median of like 52 days on market. And so if you've been on the market for 18 days or longer, that may be your indication that you need to make a price reduction.
And we're right there.
And we're
Like
right there.
if you compare to last year, we're equal to where we were.
Yes.
Okay.
Yep. And so what I don't want you to do right now is panic reduce your properties. And so I'm seeing a lot of people still go through and make a price reduction after 2 weeks on market and you're not under contract. So you panic reduce. It's taking 3 or 4 weeks to get enough showings on your properties before it goes under contract. So wait until weekends number 3 or 4, or until you hit those 3 benchmarks before you go through and start reducing your properties. Now, here's the big kicker this week. And so price reductions for units that went under contract last week, we saw a 5.5% increase in the rate at which price reductions were being made. And so 43.6% of all the homes that went under contract last week had a price reduction. 2% decided to raise their price, and 54.4% remain unchanged. And so price reductions are up. They're not as high as they were 1 year ago. So we might be catching on to the fact that we need to be watching our showing activity a little bit better. But 1 year ago, showing the rate of price decreases was actually about 47%. So it was a lot higher. So we're not seeing quite the same level of price reductions, but it's definitely up week over week with some very motivated sellers that are out there right now.
Could the 2% increase have anything to do with like an upgrade that happened and then you increase the price, or is it the consistent listing?
So what I think is happening, so that 2% equates to, I think it was like 10 homes that ended up increasing their price. And so one reason could be is I entered in $1 million listing, but I thought the last 3 zeros were implied. So I entered in 1,000. And I meant to enter in $1 million. So there's one reason why we see price increases. Another one could be is that I listed it at 500. I got multiple offers and it went for 550. They're changing the price to 550 at what it went under contract for in the MLS and then marking it under contract.
Got it.
Okay. Looking at where we are for price reductions also got larger this week, where we saw about a 5.7% price reduction, or about $40,000 off of an average priced home, which rings in around $750,000 right now. The under $500,000 market will zip ahead. I think I'm running short on time. I've got 6 minutes to go through.
We went so far over
70 slides. I got this. I have my 5-shot espresso drink here that's full of sugar to get me through this. So this is where I'm talking to you guys about the move up market. If you're under $500,000 right now and you want to make that move into a $900,000 house or $1 million house, you've still only got 1.2 months worth of overall inventory. We did see that our average daily active count went up by 7%. So we had about 1,700 total homes available for sale, and pending transactions went up by about 6.5% with 329 units going under contract. And so month supply of inventory is still historically very tight right now for this market, where if you're in one of those inner landlocked ring suburbs that run around the inside edge of C470 and you're under $500,000, you're still likely to draw out multiple offers at this point in the marketplace. The odds of selling only declined by about 1.7% this week. You're still sitting at about a 55.6% overall odds of selling. So that's healthy, right where we're supposed to be. This market is even shyer of balance than where we are in our average market, where we only have 20.3% of the inventory required to offset demand right now. In this market, we would need to have about 8,600 available homes for sale to offset demand. You're still getting about 2.4 shows per property per week. With about 4,200 total showings that were set last week. That actually increased week over week. We saw a 4.3% uptick in the rate of showings for homes that were under $500,000 this week.
See, but that makes sense to me. That's what we're feeling. And I think it's that get in before the holidays thing.
Yep.
You know, I was thinking as you were telling me, tell me if this makes any sense, because I might be pulling this out of my ass.
Yeah, I like to make stuff up too.
I was thinking, as a listing, if I had a listing in the $500,000 range, my target is probably first-time home buyers.
Yes.
First-time home buyers that are reaching to get to there, right?
Yes.
And they probably have roommates that they're bringing with them.
Yep.
So what if in the listing description, you also talked about what's the average room rent go for there? What's the average monthly rent go for there, right?
That's a
and
great
you can't
idea.
really do short-term rents inside Denver.
Right.
But what if you highlight that to help them go, okay, if you put this out online and got a roommate, you could offset your mortgage payment by this much.
That would be a great idea.
Right?
That's a great idea. That's definitely a first-time home buyer.
It is a first-time home buyer.
Or
It's
all
the
into house
flipper.
hacking.
Yeah. Yeah.
Super into house hacking.
Yeah.
But 2.4 shows per property per week. This market was also about 13 showings to go under contract. So you've had a total of 13 showings and no offers. It may be time to consider a price reduction. Days on market really stretched out this last week. It was a 17 median days on market. So if you've been on the market for 17 days and no offers, then you may need to consider a price reduction. Price decreases also went up in this category by about 4.6% week over week, where we saw 42.3% of homes decrease their price, 2.3% increased, and 55.3% made no change to their price whatsoever. The size of the price reduction really shot up this last week by almost 0.5%. The average price reduction off of a $500,000 home or less was about 6.1%, or about $28,000 off of that original price. So pretty significant price reductions. Here's our strategy sheets for 500 to $1 million. Again, you can see how cool it got as we went through Labor Day weekend. And unfortunately, it hasn't picked up very much in this $500 to $1 million segment. And this is our largest birth of homes when we look at the overall market, where it's, how much is it? It's about 40%. 60.2% of our overall market falls into that category. And so this is also our most interest rate sensitive category on top of that, where they're really watching what's happening with those rates. In this market, we ended up seeing that our average daily active count went up by 2.4%. Pending transactions went up by 3%. Month supply of inventory remained relatively flat with 1.9 months worth of overall inventory. We're going to start to see some more expireds and withdrawn listings coming off this market right now. The odds of selling only fell by 0.2% this week, so it held relatively flat at 45.9% overall odds of selling. 32.2% of balance in this market. And so we're still far from a market balance in this particular price point as well. You're getting about 1.6 shows per property per week. Showings were down in this category by about 5.5% week over week. So showings are starting to slow as we head into the fourth quarter. 13 showings to go under contract, and that's down from where we were over Labor Day weekend, where we got up to about 15 showings to go under contract. Now we're down to 13. So if you have 13 total showings, it may be time to consider a price reduction. Days on market, 1 day longer, and week over week, that increased by 46.2%. We are at 19 median median days on market right now for those units that were going under contract. Even bigger price reductions are happening in this price bracket. Price decreases increased week over week by 7.6%, with a 45.5% of the homes going under contract making price reductions. There's that same 2% that likes to raise their price, and then 52.4% made no change to their price whatsoever. Price reductions were flat this week, 5.3% off of the original price, or about $38,500 off of that price.
That doesn't hurt as much as
No.
the higher price points.
No. So let's talk about the higher price points. So here is your strategy sheet. As you can see, Labor Day week, throwing right through the middle there, all super blue, ended up picking up a little bit more, and it was right on pace with about where we were in August in terms of our overall color scale for units that are moving through our market right now. But something that's been really interesting to look at is this $1 to $1.5 million market, is that we now have more inventory in this market. That blue line that runs through, that's the big wave, that's our active inventory. At this point in the market, we have more inventory in this market than what we've seen in about 4 years.
I've been noticing we continue to increase in inventory. We've been doing it most of the year.
This is now starting to represent a larger portion of our overall market. Average daily active count pretty much flat from last week to this week, with 640 units on the market. Pending transactions this last week went up by 64.9%. We put 61 units under contract in this market last week. And so that shoved our month supply of inventory down to 2.4. And the thing that you have to be really cautious with, $1 million is a lot of money.
Yeah.
I don't care who you are.
Yeah.
$1 million is a lot of money. And there's a lot of sticker shock that's happening right now in these homes. And so it is even more important that you are turnkey with your over $1 million properties, that you are getting them to as close to perfect as possible, because people look at this, it's a lot of money.
Yeah. It's a big monthly payment.
It's a lot of money.
Yeah.
And so again, 2.4 months of inventory where you're either under contract, multiple offers in the first weekend, or you're on the market for like 6 weeks, and there's nothing in between.
Right.
Which is interesting. In this market, we ended up seeing that overall the odds of selling actually increased by 0.3%. We were up to 38.7% overall odds of selling. We are at 26.8% of balance. So this market is even tighter than what we're seeing at lower price points right now. Only about 1 show per property per week in this price range. So if you're not getting your 1 showing a week, maybe time to consider a price reduction.
That would drive you crazy. 1 showing a week.
1 showing a week.
Yeah.
We're looking at 12 showings to go under contract right now. So if you had a total of 12 showings and no offers, maybe time to consider a price reduction at that point. Median days on market. Look at that. Again, those units that are coming to market that are in beautiful condition are going under contract. It was 14 median days on market last week for these units that did go under contract. So there are buyers that are out there. They just want it to be perfect. Price reductions actually went down in this price segment by 12.2%. We saw 32.2% decrease their price, nothing increased, and 67.8% of what went under contract last week made no change to their price whatsoever.
Interesting.
Average price reduction was actually smaller this week at about a 7.3% price reduction. You're looking at overall about $100,000 price reduction, which is very common in this over $1 million segment, in order to get it down a searching tier.
That still hurts.
It still hurts.
Like that's a small
lot
house.
of money.
That's a small house.
It's a lot of money.
Other metros, not ours.
So 1.5 to 2 million. This is now 2.8% of our overall market. This market, you can see Labor Day weekend, super cool, not a whole lot going on. Then it's improved and started to downgrade as we get into the end of September. In this market, average daily active count only went up by about 2.5%. Pending transactions, there were 18 of them this last week. So our month supply of inventory is sitting at 4.2. And in this market as well, look how much more inventory we have in this market than where we were just over the last 2 to 3 years. And so active inventory is way up overall, but so are pending transactions in this $1.5 to $2 million segment. The odds of selling ended up declining by about 3.5% this last week, with a 27.5% overall odds of selling. In this market, we still only have 35.2% of a balanced market. So we're still very shy and shallow of inventory overall. In this market, about 1 showing a week. So if you're not getting your 1 showing a week, that may be a sign that you need to go through and make a price reduction. Again, this speaks to how picky those buyers are right now, especially in this $1.5 to $2 million segment. They're looking at on average 17.4 homes before going under contract. And so if you've had a total of 17.4 showings and no offers, it may be time to consider a price reduction. production. Looking at median days on market, look at how much that went up just week over week. We're at 57 median days on market based off of data from last week. And I don't know that my graph updated up here.
I was gonna say that.
Yeah,
that's
that's
not
it
right.
looks like I didn't catch this.
It's like
So
370 minutes. It's like a decimal
but
point.
it was
Is
50, yeah. Something's off on that one. I'll fix that. But it was 57 median days on market last week. Decreases 55.6% of all the homes in this price range that went under contract last week made price reductions, and 44.4% remained unchanged. Price reduction was about 6.5% off of the original price, so it's less than what it was a week ago, but that's still $122,000 off of that original price. How are we on time? I'm 5 minutes over, and we have 8 questions.
Perfect.
Yummy.
I'm not sure what we said at that time.
Yes, I was probably talking about
That's my husband.
drink. Oh, is it? That's great. Where did the data related to 90% of sellers not wanting to update and 77% of buyers looking at turnkey homes come from?
So that came from a Curbio survey that I actually attached to the live that I did this Tuesday. If you guys want to go check that out, where I was like, buyers in this market have an effed up road ahead.
Yeah.
And talking about what they're up against.
I did see that post. I was
Yeah.
you've had good posts. You've had some really good ones. I'm seeing a lot more buy downs in the MLS. Yes, definitely. A buy down is definitely going to be, it should be essentially more effective than a price reduction.
It 100% is 100 for every
It should be more
$10,000.
incentive to
Yeah.
a buyer than a price reduction is.
Because we're going to get to the end of this. It just feels like forever away at this point, and it could be well into next year. But giving that stability of that lower payment, the 2-point interest rate drop is much more effective than every $10,000 you borrow. It's about a $50 a month payment. You can drop it a couple hundred, depending on the loan amount.
Yeah. Where can we find your rate buy down spreadsheet, Nicole?
I have that, Miss Kim, and I would gladly send it to you.
When you say odds of selling, what does that mean? So the odds of selling is essentially where I take into account all of the available listings for sale that week versus those that go under contract and or close in the same week, and I project it forward for a 4-week period of time. So that's in essence the likelihood of you selling at the current rate of sales in the next 30-day period. Do you think that the prices are staying somewhat steady because buyers are asking for higher seller credits? Example, buyer offers at list price but asks for a large credit. Do you track seller concessions? I am in the process of extracting the data in order to track concessions. It is a bear to go through and pull out those concessions because I have to go back.
Will you have it back dated as well, or just
that's
current
the hope? That's the hope, is that I can get it back to 2008, but I have to go through and extract each month at a time out of the MLS for all of the closed transactions. And so I've got a spreadsheet now that's built from 2008, and I think I've got it through 2016, and then I started just keeping annual cycles of that in about 2020 for closed transactions. So I've got about 3 more years that I have to go through and extract in order to do that.
So we know what you'll be doing over the holidays?
Yeah. Yep. And so, yes, I do not track the net sold price. I'm tracking the closed price of those properties. And so that could be why we're seeing that, but there are a lot of rate buy downs right now. And when I talk to my closers, they're saying that about 60% are coming through with those rate buy downs on them right now.
I'd be shocked. I mean, every listing I think should just have a rate buy down kind of included. You got to talk to your seller about just what is their net proceeds if you do that, because if you don't do it, you're up against other sellers who are and builders who are.
So what would the purpose or thought behind the example you gave about if a home listed at 550,000 and they get multiple offers and take an offer at 550, but before they change it to pending, they up the price to 550K? What is the strategy behind that? It's not a strategy, it's a mistake.
Right.
They're not supposed to do that. Yeah, they're not supposed to do that. They're supposed to put it under contract for what the list price was in order for our close to list price ratios or multiple offer analysis to operate properly. Otherwise, it reports as a rate as an increase in the price. And that's not the way that that's supposed to work. You're supposed to put it under contract at what the list price was, and you're not supposed to up the price to what the contract price was.
Supposed to is the optimal word.
Yeah. And so let's see, what percent does the 1.5 to $1.1 million market represent? What is it? God, why can't I remember that number off the top of my head?
I don't know where your presentation.
I've completely screwed up this entire screen that you've got going on here. So
Take a comment.
7.6% of our overall market is between 1 to 1.5 million. My sellers would like to offer seller credits. The property has been on the market for 6 days. We've had 3 showings so far. To add the seller credit offer, we would need to reduce the price by a little so it can appear again. Thank you so much. Yes. In order for that to happen, for you to go out and reping that so that it goes out to all of the search engines again,
Yes.
and to hit everybody's prospect matches, you have to do a small price reduction in order for that to happen. Love to have the slides. Yep, will be sent out to everyone who registered this afternoon. We'd also like to see the rate buy down sheet, and so maybe you can attach that when you send that out to everyone. What data can be written in Chat GPT without infringement? Any of it, guys. I put this together for you so that you use it.
Yeah.
I would love to be credited when you
Yeah.
do post that information on social media or tagged in it. But I put this together so that you guys have a copy of everything.
Yeah,
Yep,
you guys
everybody
should be using our data and tagging us. I mean,
Yes.
that's the key. Tag us, let us celebrate it with you, and comment in on, if other people comment, we can also respond to that.
Oh, Laura Levy, you. So now that RE Colorado is syndicating Iris, any chance of adding northern counties, Boulder to your reporting? You knew I had to ask. Of course, I am thinking about it. I'm taking some steps to streamline the way that I extract the data in the upcoming months through new MLS arrangements. And so once I kind of get that portion figured out, it will allow me to expand a lot easier. And so it's something that has been in the works for a long time. Tracking concessions won't be accurate if the listing agent changes prices to reflect the purchase price.
Right.
That is true. How is the best way to advertise the rate buy down on a house between 1 to 1.2 in the public remarks section of your MLS entry form? And so in that public remarks section, that's the stuff that goes out to the consumer facing websites, not your broker remarks and your public remarks, in order to advertise that rate buy down. Yep. And so
I'll be sending out the rate buy down sheet.
Yep. And yes, on Northern Colorado. Thank you. We are way over.
Yeah, this whole screen situation.
How did I do this? I don't know what I did. Well, and I don't want to minimize this now.
We're going to disappear here in a minute.
How did I do that?
I think shut down your slide deck.
Okay.
We'll do it.
Did I do that? Did I close mine? I think I did close mine.
Okay.
Yeah.
All right.
Do you want me to try and figure out how to share it so that?
Yeah.
There we go.
So the multiples.
Is it doing the multiples?
Yeah.
All
right.
See.
Well,
how I really screwed this up this time.
you did.
I really did. There you go. That's kind of how you normally have it.
I think you guys are going to see, we don't want to share this screen. We want to share this screen. Let's see if I can do that over here. Okay, hang on. I think I got it.
You got it. Yeah, you got it. You got it figured out.
All right.
I don't know what I'm doing.
Yeah.
I don't know what you do. I shouldn't be allowed to touch stuff. This is why we can't have nice things.
Merchandise. Don't touch merchandise.
Everything everywhere.
She's driving me crazy. Okay. All right. Phil Jones, make sure that you guys sign up. We had our best next big thing kickoff ever. We've got a massive number of tickets already sold. We've got Carr, who's a sponsor. We've got Realtor.com. We've got DMAR, who's a sponsor. We've got some massive teams behind this. People are buying tickets for their entire teams.
That's so great.
I love it. There's so much energy
Really
and
fun.
excitement coming around this, guys. We dropped the price because I know the market that we're in, and it's going to happen on February 1st.
February 1st.
So do yourself a favor and buy the ticket right now when you really couldn't care about $200, because in January, you're going to be pissed off that you didn't buy the ticket back in October, right? So February 1st, mark it on your calendars, make sure to sign up. It's thenextbigthingcolorado.com. All right, so let's jump into what's going on in the market. Oh my God, rates. Hello. So we sent out an emergency text yesterday and said that the 10-year is exploding and the rates are going up. And there wasn't even a specific thing. This is like, it's a data catch up is really what this is. The market is finally figuring out that, oh crap, the Fed's not kidding. That's really what's happening, because we talked about it last week at Agent Ignite, where the Fed's median, and I'm going to show that in a minute, from the dot plot shows that that rate is going up. And so we had this massive explosion and we jumped up to 7.625, and today's rates aren't getting better. So this will probably be 7.75 nationally today, maybe even higher. So people are talking about, are we going to hit 8? And I was like, I don't know, but I was like, we could, because I could see it. I could see that the market is freaking out. We're holding back for way too long with hopes that they're going to drop the rates this year. And it's just not going to happen.
Yeah. Powell is not effing around. Powell is not effing around.
Nope. He is ride or die. He's all the way to the end, 2%. And remember, guys, he's got 3 years left. He really could not care less about who gets elected. He could not care less. He's got 3 years left, and this is going to be the hill he's willing to die on, because it's his legacy. So 2%. So the 10-year broke through a ceiling of 4.55, and it broke through, and now it's having a hard time getting back below it. And the problem is the next ceiling is quite a bit higher. So we have a lot of room to grow. Now, it doesn't mean it won't come back down. There's a lot of volatility, and we're moving bigger on news that we shouldn't be. Right. And then we're not moving on other news that we should. Right now, the market is acting irrationally because it's based on a lot of investor emotion. You got to remember that the 10 years based on a market. It's based on a supply and demand of the bond market. It's not just based on what we think it should do. And it's not solely based on inflation anymore. It's based on the investors' interpretation of where the market is headed. There's a lot of future expectation that's built in the current rates, right? So the 10-year broke a pause. If you're not signed up for our text, you need to be. We blasted out everybody just saying, look, guys, here's what's happening. Get in front of it. Don't go be the ambulance chaser, but be able to talk around it. Talk to your buyers about more strategic long-term planning than getting sucked into what the rate is today and the movements that we're seeing. That was the nature of our text yesterday, not to be an alarmist, but to simply say, this is happening, you need to know it, and you need to be able to speak to it if somebody starts wanting to talk about where rates are headed. So durable goods came out this morning, which is rattling our interest rates, and it really shouldn't. Durable goods, remember, is anything that's over 3 years use. Think washers and dryers over your makeup that you buy from Amazon. Like, I don't know, right? So durable goods are those longer things. What's really pushed this up is all of the replacement, interestingly enough, of military goods because of what we sent over to Ukraine. So that's an interesting timing of things, but that popped up way more than expected. The markets didn't like it. And so where my mind was, oh no, it's a container story. Because here we are, I have to say containers again. I can't help myself, I'm sorry. It has nothing to do with containers. It is all of this durable goods, and the demand is stronger than the supply right now, which is pushing up prices. So it is a container storage, is a little bit of a reach. Initial jobless claims was up 2,000, but it wasn't up as much as it was expected. It was really about 13,000 lower than what we expected it to go up. So we were up about 2,000, which actually dropped the 4-week moving average below the pandemic initial claims. Let me just highlight this, that this is actually not what we want. Like, it's good in a market where we want everybody to be working and we want prosperity and we want a revival. That's not this. We don't want this. We want to slow down. We want people to feel, I hate to say we want people to feel scared. We just want them to stop spending, really, ultimately. And it's just staying right there, and it's slightly dropped down below. Fed member Kashkari also came out this week talking about the fact that he expects a second Fed rate hike. He doesn't make the rules. I don't want you to think that now we're going to have two. We're all kind of expecting one in November. A lot of it's data dependent, but again, really, do we have to? I feel like they're just continuing to try to put fear in the market right now. And with everything going on right now, with last week, we heard about the median on the dot plot, and then we've got these economic reports that are coming out. Now's the time you want to go, you know what? And I actually think we need at least 2 more rate hikes. Shove it, sit down, and be quiet. Just stay out of it. Shove it. No. Don't put that in writing. But it's just fear on fear. And that's what's happening. So I'm trying to give you guys a little bit more perspective on why the rates went up, because that's the question you're getting. Why? What happened that the rates went up? And it was a series of economic events really compiled on top of a market and an investor base who's now finally letting it sink in that the rates aren't going to come right back down again. That ultimately, that's the reason. It's just these number of events that happened in the order that they did that created this more fear, more actualization, and then we had this correction. Ultimately, this is more of a correction than a direct reaction to an action. Right. So this is the ability to be able to talk to this when people are going like, why is it going up? How high is it going to go? And how long is it going to go there? And ultimately, you don't know. We can't know any more than Powell's statements that he's navigating by the stars. So I got more than stars, baby. I got more than stars. I don't know how much more. So we did talk about this last week. It was on last week's recordings, talking about the dot plot. And really, it's just a matter of each one of these dots is a vote. And they're just talking about the overall median. If you actually look at the course of where those votes are going, it inched up 0.5%. So that's where people are going, well, are they going to raise it more? Could there be 2 more rate hikes versus cuts involved before we start seeing cuts? They absolutely knocked it down, the expectation from 4 to 2 cuts next year. So all of this is just more of an actualization happening that's making a correction in the market. And then there's the inverted yield curve. So we're watching this, and as you can see, it's actually heading back towards zero. So when you get in here, you've got a market that is it's an expanding market. It's a healthy market. It's where consumers are spending. We're all in kind of in this positive. I mean, think about the last 10 years. We're all in this positive economic situation. And right now we've just been in this uncertainty. We've used this inverted yield curve for many years to tell us that a recession was coming. And we had it right here. And it talked about this recession that we had coming anyway. But then the pandemic happened and it forced the recession. So this one was a forced recession, but a recession was coming anyway. So now you had this thing, this inversion that a recession is coming, a recession is coming, a recession is coming. Oh my gosh, when is a recession coming? And so I've been telling you guys that they've raised the short-term rate so high with the Fed rate that 30-year fixed is lower. It has to uninvert if the economy is going to stay strong. It's when that economy goes into recession that is confirmed. The recession happens, the economy starts to get strong again, and the Fed rate goes down, and this lower rate comes back down into a normal relationship from the short-term rates to the long-term rates. That's not happening right now. So one of 2 things got to happen. We got to go into a recession, or these 2 got to flip-flop. And if this one's not coming down because the Fed is not lowering the Fed rate, which is tied to short-term rates, if they're not lowering it and they're going to stay on it for higher for longer, then what's my option? This one's got to go up, right? And that's what we're seeing. This one's going up. The 10 years going up. And that's where our interest rates are going. And right now, this inversion is becoming less inverted. We're going to continue to watch that. All of this is dictated by when the Feds actually start to lower the Fed rate and or when we enter into the recession. So CoreLogic came out hitting an all-time high. They were the holdouts. So we've been watching this every month. Or sorry, Case-Shiller. I said CoreLogic up here. It's Case-Shiller because CoreLogic is down here. They've already been in the high. FHFA, CoreLogic, Black Knight, and Zillow are all massive data aggregators that watch the true appreciation of homes and the home price index nationally. Case-Shiller was the last man standing. They just came out with their most recent report showing that they have an uptick. They've hit an all-time high. Our home prices keep going up. Our home price, it's like, when's it going to end? Trees do go to the sky. They do. I'm proving it right here. So this is intense. This is intense. And we're seeing this shift around the country due to affordability and having these conversations inside the reality of what we're experiencing and what a first-time home buyer is experiencing is why we want to talk about house hacking and opportunities. And can you rent the basement? Or where are you growing into? Or what's that budget that's comfortable for you? Forget about interest rate and focus on budget. it's changing your conversations to those that can help a buyer get out of the fear and into action. That is our job right now more than anything else, because this is truth. So the US housing market now hit a record 52 trillion net worth inside our homes. And remember, 38% of them are owned free and clear. There is a lot of equity in this country, a lot of cushion. Bankruptcies, foreclosures, just foreclosures and short sales certainly are not happening other than those homes that were bought within maybe the last 12 months. Ultimately, it is and it will be a supply and demand issue. So I pulled out the active inventory from the DMAR reports, and then I pulled out the Denver population from a website that shows, and it can pull out the 11 counties so that I matched it up to the same statistics. And we've actually seen a 20% increase in population since 2008, yet we've seen this massive drop in inventory. Right? That's a supply and demand issue. You've been saying it.
Yes.
So when we see this, and I did this on the local level so that you guys could see, and we're expecting a 10% increase in population in the next 10 years. Well, really even less than that. In 2030, they're expecting a 10% population increase. Expectations can change, right? It's all pencil and paper math. But if that continues to happen and we've got inventory that's locked up and will be locked up for a long time coming, and we're kind of landlocked, there's only so many places builders can grab homes to build other than land or other than scrapes, which doesn't really count, then you're not going to have the kind of increase in inventory given the increase in population. Guys, this is not going to change for a while. And you have the birth rates that we know that the largest age group today is 21. So we know that that's going to continue to happen. And there's going to continue to be buyers here. Now you can say, well, it's too expensive to buy here. Well, we're going to gravitate towards those buyers who can't afford to live here. All right, let's jam through this. We got just a couple minutes left. So Americans are finally not feeling the love. Consumer sentiment index is dropping. I don't love that. Nobody loves that, but I like that a lot right now because it means that spending is going to slow down if they're feeling a little more fear and they're holding in a little bit tight. Demand stuck. It dropped 2%. Last week it increased a couple percent. It's just stuck at historical bottoms. August 2023, a rental report came out showing that in all of but 3 metros, Memphis, Pittsburgh, and Birmingham, Alabama, it is cheaper to rent than buy.
Yeah,
it is. We know that. We know it's cheaper to rent than buy. We were talking about that on the last live based on our median rent of $2,850 versus our median home price, putting 10% down is $4,000. That's a big jump. So rents continue to decline. They soften, right? They're going to correct. We're actually right on target for 2019. So what that tells me, it's going to continue to feel okay for our renters, but we have to continue to give them that vision. The soul never thinks without a picture. You have to give them that picture. And we're going to be talking about your picture and your vision at the November Agent Ignite when we do goal setting. And we're going to be doing a little bit differently this year, really hyper focusing on what that picture looks like. So help them with that vision. If you need these buy versus rent reports based on your zip code, this was powerful. We talked about these numbers in this week's live, and it's like, I need that. I need the numbers to show them where they're headed, because right now the cash flow, look at this, it actually never catches up. Like the rent would have to go up like 5 to 6% every year for it to catch up. But it's not all about that. But if it's not the right time to buy, it's not the right time to buy. Or if you're not in it for the long run, it might not be the right time to buy. It's creating the vision for the people who want to buy, right? And then knowing who that person is. So you're spending your time with the right people and not continuing to keep up with the buyers that have no intention on the long-term vision. PCE is tomorrow. It could move the markets again. Worse. I mean, we already know it's going to be worse. I mean, so the theory is that we know it should make the markets worse, but we'll be sending out that Friday text. And then lastly, the government shutdown. So if it happens,
I got a passport application.
I hope you don't need it.
Kind of do.
Yeah. All right, guys. So this is what we're up against. How are your buyers affected in all this noise? Conventional, they're fine. FHA, if I can get a case number and everything's fine, it's good. But if I need a manual, and sometimes when we do case transfers, then sometimes we have to get the HUD office to support that, and they're not going to be there. So they're not going to be supporting that. So there's going to be some buyers that are caught without being able to close. The VA buyers are fine as long as I can pull a COE automatically, but if I have to get a manual verification of benefits, you're going to be waiting until the government opens up again. USDA will not issue any more commitments. So if you don't already have one and you're not already under contract and we go into a shutdown, you're not going to be able to do a USDA. They're going to be holding those. And then tax transcripts are going to be in a halt, and any VOEs for government workers are in a halt. So if you've got any self-employed borrowers that filed an extension and they haven't gotten their taxes in yet, they might not be buying a house until the government opens up again. So just to be aware, you're having these very real conversations. Sign up for next month's midterm rentals. This is the opportunity we were talking about just a little while ago with helping your buyers see the vision. And the next big thing, we'll be sending this out. You don't have to grab that right now, but if you get it, I cannot wait for that.
Gonna be great.
Oh my gosh.
It's gonna be great.
So we're right up at 11 o'clock. I said, let's go ahead and answer some questions for those of you that need to stick around. For those of you that can't, I totally understand. Let me get out of here so that we can answer some of these really quick questions. Thank you guys for hanging in there. PS, your data updates are so much better than all the other companies that attempt to do it. Yes, they are.
All right.
I just have to say thank you. I use and digest the information weekly. You give me so much time and I appreciate your hard work.
Thank you.
Thank
Oh,
you.
it's our pleasure.
The buy down sheets are coming. We'll get all of those to you guys. So no worries about that. Sorry, I didn't get the phone number to text. We'll send that out in the email that we send out. If you don't get my emails right after this, guys, you know where to find me. Text me and I'll make sure that you're getting our emails when we have your email right. Tracy, seriously, shove it. I agree. You guys, advice you today. How can inflation be reduced with the increase in government spending? Not going to happen. The inflation, the government spending is obviously part of it, but a lot of it has to also do with the supply chains and the increase everything. I don't know that we're going to see pre-pandemic costs of anything anymore. We've increased, getting down to 2% is going to be seriously hard. Interest rates, unfortunately, are going to increase. We're seeing that. Where can we register for Agent Ignite? Yes, we'll have that in our email. Oh my gosh, all the things. Y'all the best. All right, you guys were fantastic. Thank you so much for joining us today. What a pleasure and how much fun.
It was fun. Feisty, but fun.
It was. You guys, we're going to be sending out your reports. Megan sends out hers. I'll send out mine. And of course, you can get a copy of the slide deck and the recordings also in the Facebook Agent Ignite group. If you're not a member of that, you need to be. It is always a pleasure. Nicole Ruth with Movement Mortgage.
Megan Aller with First American Title. We hope to see you guys at our closing tables and we will see you guys next week. Have a great weekend.
Bye.